Happy New Year, and thanks so much for watching this short video. I wanted to touch base with you personally because the markets have become so volatile at the beginning of this year, which is turning out to be the worst year in the history of the markets. It's really coming down to three major areas: oil, the unrest in the Middle East, and China. So let's talk about oil. It's currently trading at $33 a barrel. We have not seen this price since 2003. Now, on one hand, it's good for consumers because gas is certainly cheaper at the pump, and it's good for companies like airlines and Federal Express because they cut their costs as well. What's bad about it is it hurts oil and gas companies as well as the people who live in states like Texas and the Dakotas. We believe that oil will stabilize and eventually the markets will decouple. We will return to looking at fundamentals on the stock market like earnings. The Middle East is also an area of concern. Iran and Saudi Arabia have officially broken ties altogether. That, coupled with the fact that North Korea has detonated what was originally thought to be a hydrogen bomb, it's now thought to be a smaller nuclear device, no less worrisome though, and certainly makes people feel uneasy. I would expect that the Middle East issues are going to continue. Markets don't like this uncertainty. Markets will probably continue to be volatile, and I just want you to be aware of that. Last but not least is China. Boy, has that been an eye-opener this year. The problem with China is there's been a complete lack of transparency. And the problem with that is that people really don't know whether or not they can believe the numbers that are being published by their government. Here's the thing about that. The government knows that they're in a bad spot. They're trying to do lots of different things. And what many countries and many people believe is manipulating their currency and their markets in an attempt to try and prop things up. Think about it this way. It's kind of like they've got a really bad flu. They probably have pneumonia. And they know they're really sick. So they're doing anything they can possibly do to find a cure. Again, some of the things probably won't work. Time will tell whether or not that happens. I don't think it's going to be fatal. The issue that we have is that the Chinese market is really made up of the Chinese people. It's the restrictions. 98% of the shares are actually owned by the people of China. Only 2% is owned outside. And with such a new market with new investors, you get the panic selling that we've seen this week. And while China was trying to curb that, what they found was that actually that was contributing to the panic because it was like a run on the banks. And so when they didn't allow people to trade at all, the next morning everybody woke up and said, we better get out now, otherwise we're never going to get our money back. Ironically, last night they got rid of all the trading curbs and the Chinese market went up by 2%. Now, I don't think that we've seen the last of this. The real question is whether or not their flu is contagious, whether or not it's going to work its way through Europe and to our shores here on the United States. If it does, it's probably going to be not as deep and shorter lived. So just be aware that that's probably going to happen. It could happen. Time will tell. You know, the one thing I probably should have also mentioned is the Federal Reserve. So in December, it became official. The training wheels of our economy have been taken off. And we are riding our bicycles like that 7-year-old and trying to gain some momentum. And it's a little wobbly right now. It's a little shaky. We may end up wobbling a little bit more, and to be honest with you, there's a good chance we could actually topple over. That would result in a recession. It's been 7 years since we've had a recession. It would not be unusual because markets are cyclical. But we're Americans. And like that 7-year-old, we're going to get right back on our bike and we're going to start to pedal again. And when we do, that will begin that next phase of recovery, expansion, and the markets will follow suit. In the meantime, it could be a little uncomfortable, and I just wanted you to know that we here at Key Financial are aware of what's going on, and we are watching your portfolio very carefully. We continue to believe in the concept and the strategy of strategic asset allocation, and more importantly, looking at it within the lens of your financial plan and your objectives. That's the most important thing. Our clients are not pie charts. We've built this to serve your needs, and we have a good understanding of what you need to have happen, when you're going to need cash flow, and how to make that happen for you. In the meantime, I just want you to know We're here if you need us. We're a phone call away. We so appreciate your business and your loyalty, and we look forward to seeing you, hopefully, at the Valentine's Day on February 12th. Thank you so much for tuning in. If you think that this is helpful, this is the first time that I've done this. We're sort of practicing it. If you think it's helpful, if you could just send us a reply, that way we'll know who opened it and whether or not you found it to be helpful. If it is, we'll continue to do it. In the meantime, have a great weekend. Take care now, and thanks again.